So kia ora and welcome to everyone to this NZUS Council report launch and panel discussion on digital trade. Today we'll talk about the report we're launching. Hopefully you've all received a copy, or actually you can just go to our website, and it's the lead story there, and you can download it, and I'll distribute copies of it again afterwards. But today we'll talk about that report. We'll talk about the future of NZUS digital trade, the relationship, the challenges that need to be addressed to really accelerate digital trade in the NZUS relationship context. And then I think importantly, we'll have a discussion around the value that a digital services agreement would offer. So we've got a really strong panel today, a strong industry voice, a strong policy voice to take us through some of these big questions. So for those who don't know me, I'm Jordan Small. I'm the Executive Director of the NZUS Council. And I really just want to warmly welcome you all, those in the room here and those attending virtually. We've got in the room here, we've got from government officials, we've got some industry voices, our members and advisory board members, some representation from the US Embassy, so a good group there. Online, as of last night, we had about 60 virtual registrations, which I think is pretty good for an event on digital trade. Quite a niche area, but obviously very important and close to a lot of people's hearts and businesses. So great to have that number of people attending. Looks like we've got people slowly joining. So on attending virtually, we have Fran O'Sullivan from our board, Tim McCready, John Wood, Andrew Curtin, Michael Barnett, Mike Hearn, and then industry voices, Mitchell Pham, Chair of the Aotearoa Digital Council, Graham Muller from NZ Tech, Chelsea Rapp from the Game Developers Association, James Brown from FinTech, Christy Grant from the creative industry, Karen King from Glass Elephant, Cara Sutton from Pickpock, and my old friend, Erica Lloyd from Soul Machine. So yeah, welcome to all of you also. Just a reminder that throughout today's session, please use the Q&A function, submit questions. If you're really keen to ask a question via video, just put it into the Q&A function and I'll enable you as a panelist to ask that question. In terms of the outline for today, I really want to take 10 minutes to very quickly go through the report findings and just set up the discussion for the panel. And we've scheduled for the panel discussion about 60 minutes and then about 5 or 10 minutes to wrap up at the end. So that's the broad outline for today. So it's it is quite quick paced. We want to move through it, but also want to give you guys plenty of opportunities to ask questions, make comments. So on that, I might just jump straight into the report. And I've tested this technology, and yes, I think that's going. So what you're seeing right now is the cover of the report, and where you'll find the report on our website. Yeah, so right on the front page there, just go and download it. I think the basic starting question for us with this project was, what barriers or challenges do New Zealand's digital exporters actually experience going to the US? And we started looking at this earlier this year, first quarter of 2021, where we spoke to approximately 15 digital exporters, their advisors, suppliers, and partners from across the exporting spectrum. There we go. But before getting into the report findings, just some key facts or figures on ICT exports. The US is obviously our largest export market for ICT. It's well ahead of Australia, the UK, Singapore, Japan. So just over 500 million in export revenue over the last 12 months. That's up to June 2021. And over the last 12 months, you've seen about close to 15% increase in export revenue. When you dig a little deeper with those ICT exports, you go to some of those sub-level categories. Yeah, what you see is computer software exports, computer software licenses are some of our fastest growing, and they're registering, growth rates of over 50% over the last sort of 4 years. So it puts them in quite a special group, and I think is quite a special quality to the NZUS digital trade relationship. Just want to very quickly focus a little on some of the barriers, because this is how we structured our conversations with digital exporters. And we really took our cue from MFAT and the types of barriers they are looking to address in digital services or digital trade agreements. And that's how we structured our conversations. And there's the three kind of core groupings of barriers. The first is this existing areas of existing regulations or laws that are just not keeping pace with technological change. And the common example there is we have order processes that just aren't managing to keep up with e-commerce. We have sort of high volume, low value goods going across the border. And so that can act as a barrier. We didn't see a lot of that in our discussions, but I'll get to that. The second area is just where technology and digital trade is giving rise to these new issues that governments really have to respond to. And they're things like privacy, sort of data protection, cybersecurity, policies that can have a good intention, but often end up impeding the free flow of data. So that's that second group. And then the third group is really that business and consumer confidence and trust in the online environment area. And so that's where you see kind of regulation around things like spam or sort of digital authentication. So things around like online invoices, paperless trading. Also in that area, you see transparency issues where it's very difficult to know what the rules are in some markets, I think, where those rules are not easily known or easily discoverable. So those are the three sort of barrier areas. When we put these common barriers to exporters during our discussions, there were really two key themes that emerged. And just to outline those, the very first was actually in the NZUS context, there are very few trade barriers experienced by our exporters. And then the second area was digital exporters are really asking for more assistance to navigate basically working in the US market. So some really elementary stuff around US setup requirements, tax complexity, visas. There was a very clear demand come through as we were having the conversations around some more assistance needed in that area. So let's focus in on that very first theme. And I just want to quickly go through that. So I think one of the really positive takeaways was the operating environment is viewed very positively. So exporters would clearly say, we value the stability, we value things like a kind of a stable legal system. And they actually often struggled to identify trade barriers, even though we'd given it was quite a directed conversation. these are some common barriers, trade barriers of experience. Do any of these kind of ring true for you? And we'd get this kind of response, which is, I don't know that there's any barriers to digital trade going into the US from New Zealand. And then is there, a questioning. And that was that was reflected across most of the conversations we had. So they're really happy with the environment they're operating, and what they want is no shocks, they want stability, certainty. We start to look at some of those common barriers like data localization requirements, privacy, cybersecurity. The comments generally reflected that these are not big problem areas. And all they want is just keep the data flowing. And that's kind of reflected in this comment that it would be a big problem for New Zealand if all of a sudden there started to be restrictions. Let me go through. Let me go through and focus on privacy requirements. A pretty unanimous position there that the EU's GDPR standards, that is the gold standard. That is what exporters choose to apply, that higher EU standard, especially where they're operating across multiple markets, just because it makes their operations a bit simpler. So you get this kind of comment. Again, very reflective comment. If we look at paperless trading, this was certainly an area where there is a lot of potential, and that was identified in our discussions. Just the number of stages in an export transaction and paper involved at each of those stages. I think one of our exporters talked about 20 different points, 20 different sheets of paper, and just the potential for that to be made paperless and just make that a whole lot easier and save a lot of cost. So you get this kind of comment here. Just moving on, I'll look at the second theme, which was more of those commercial challenges rather than that typical trade barrier. And the most often cited difficulty during our discussions was that setting up in the US. And it's reflected in this comment here. It was perceived that there was a lack of easily accessible information about the laws and regulations that apply to set up the operation of a US entity. And while this information is publicly available, it's hard to know where to find it and how to interpret it. And this is especially the case when you have exporters operating across multiple markets, multiple states, and just the sum required for exporters to obtain advice and have in place appropriate legal arrangements across multiple markets can be huge for some of our smaller exporters. So there was a clear demand there expressed for more practical setup advice. Got some question marks over the appropriate source for this advice. So there was, some exporters were asking that the government step into that role, so an NZTE, an MFAT. But like I said, there's some question marks there around the appropriate source for that kind of advice. You can't kind of have government providing that kind of legal advice. Tax was the other area cited often, very similar to the setup point, which is just the difficulty of working across multiple states and knowing what rules apply, what rules don't apply, and getting the right advice. So there was some caution there for new companies that stepping into the US can create real problems. And due to, in this particular case, lack of clarity around storage in the United States, which creates a nexus for those tax purposes. If I jump into the third area I want to focus on, it's visas. I think we'll have a bit of comment on that during the panel. But when we looked at that, I think there's a challenge there around the Kiwi Act and just building awareness of the availability of that and what that actually offers. But also a suggestion by some exporters that what the Kiwi Act offers and its coverage is not as good as the Australian equivalent. And so I know we'll talk a little bit about that during the panel. So I'll leave further comment on that till then. And then sort of just wrapping up, the obvious question is, okay, so having outlined the range of barriers and challenges and finding that there aren't significant trade barriers to our digital exporters, what would be the value for New Zealand in the digital services agreement with the US? And that's, I think that'll be a topic for the panel discussion today as well. And in the paper, or in the report, we outline 5 reasons, or five reasons. And, they are in this sort of territory of strong commercial and strategic reasons for doing a digital trade agreement. And a gold standard digital trade agreement would have multiple benefits. And the first is providing a pathway towards a broader comprehensive agreement with the US. So it being the first step or the pathfinder. The second area we cover is, okay, so conditions are really good at the moment. A digital services agreement would lock those export-friendly settings in place. The third is, and we talked about this, just the massive benefits that we could get from a paperless trading. And so that is a sort of a typical provision in an e-commerce chapter or a digital services agreement, so we could get that locked in place also. Fourth is just about establishing interoperability across areas such as electronic signatures, invoicing, digital identities. And then the fifth area we identify is, and I think it's really, really important, is providing a platform for regular ongoing discussions on some of those frontier digital and advanced technology issues. And having those regular policy and regulatory setting discussions is a massive benefit that we identify for perhaps pushing forward with a digital services agreement. So I'm running up against my time. I will just have a few final thoughts before handing it over to Tracy. Final thought on the report and the value of a digital services agreement. I think there's value in 2 innovative, cutting-edge thinkers on digital trade, governance, developing smart, shared ways to regulate the digital economy. So deepening collaboration with the US in this area, either through the expansion of a deeper style agreement, a separate bilateral deal, or something else, could help shape developments in global markets by serving as a building block to broader outcomes. I think there are strong reasons to put a digital trade agreement deal firmly on the NZUS agenda. So those are just the final thoughts. I will do a quick introduction of the panel and then hand it over to Tracy. So like I said, right from the outset, we've got a great panel today. So we have the industry voice, we have a strong policy voice. First up, we have Tracy Epps, who will moderate the discussion. Just turn this off. Here we go. Okay. Okay, so just a quick introduction of our panel. So moderating the panel today is Tracy Epps. Tracy is a trade law and policy consultant at New Zealand's, one of New Zealand's leading law firms, Chapman Tripp. She is also a co-author on the report. Also on the panel today is Stephanie Honey, who will be well known to many of you. Stephanie runs her own consultancy, Honey Consulting. She's a trade policy consultant and an expert on digital trade and digital policy. Andy Prowl, who's in the room with us, and he'll jump into view soon, is a co-founder of cybersecurity firm Redshield, a tech entrepreneur, board member of the NZ Internet Task Force, and heavily involved in organisations like ours and others, just about, I guess, promoting technology and the industry. Joining us from DC is Joshua Meltzer. He's a senior fellow in the Global Economy and Development program with the Brookings Institute in Washington, DC, where he focuses on digital trade. I've had the pleasure of meeting Joshua twice over the last few years, and he's incredibly insightful and just has deep knowledge in this area. So look forward to his contribution to the panel. AJ Smith is one of our other panelists. He's CEO, founder of Trade Window. He's a serial tech, innovation and investment entrepreneur. And I look forward to AJ's comments on blockchain. And then David Hallett, who we interviewed as part of this project. He's a co-founder of software exporter Company X. And actually a number of the comments in the report are his, but I'll let him talk to those during the panel. So Tracy, with that, I'll hand it over. It's all yours.
Thanks, Jordan. Well, I'd like to get straight in by asking, I guess, our three, commercial representatives, if you like, on the panel, to give us their reflections on the report. Excuse me. So I'd like to ask each of David, AJ, and Andy, perhaps first of all, if you could tell us just a little bit about what your company does. I know obviously most of the people in the room, understand what we mean by digital trade, but I know I have, talked to people recently who sort of asked the question, well, what exactly does digital trade mean? What do these people actually do? So I think, if some of those people who are still, I think, sort of like me, probably still sort of struggling to understand exactly what the digital economy is about, it would be really great if you could maybe just give us a short intro to what your company is doing. And then if you could give us your perspective on the report, do the findings reflect your experience? Obviously, we did hear different views in the course of interviewing different people. And in particular, it would be great if you could tell us a bit about the key difficulties that you are facing in the United States. So I guess if we just go, I guess, in alphabetical order for want of any better approach. So we'll start maybe with Andy. And then go to AJ after that.
So good morning all. So I'm the founder of Redshield Security. So if you look at the what we do, it's a cybersecurity defensive service. So we have software that sits in the cloud, sits in Amazon, sits in Microsoft, globally, sits in front of customers to protect their high value assets. Those customers are around the world. So if you look at why that is a digital export, we don't export any physical things. There is no product that we pack in containers. There's no boxes people get. Every single thing is cloud delivered. And so from my perspective, if I look at the opportunities, well, twofold really between New Zealand and the US. So obviously the first one for New Zealand is the US market for us, is probably 100 times bigger than our Kiwi market. And that's just using, rough finger in the air. But actually the value per customer is far higher for us as well. And so for our US customers, their digital footprint's bigger. The data they hold tends to be more valuable. They get attacked more. And so actually our average annual bill for a US customer is probably about 10x on our average Kiwi customer. So there is a huge reason for us to be exporting, really just from a growth perspective. But then from a US perspective, so right now in cybersecurity, everyone's needing to put up every defence they possibly can. So Biden back in May said he's putting $200 billion towards improving the US cybersecurity posture. So from that perspective, we have innovation down here in New Zealand. The easier that the US can access and consume our innovation, the better. So to us, it's a win-win scenario. And so I guess the last bit I'll say before I hand over to the other guys then is, so if you look at how it operates to us, I want to take that digital and trade as two separate bits. So for us, the digital exporting is really, really easy. We put our software up in the cloud of clouds and it's instantly available to all of our customers. So there's no tariffs, there's no waiting, it's instant delivery, it's ultra high value, great margins, almost infinitely scalable, as big as our partners could scale. So from that perspective, there is no digital restrictions on what we can do. All of the restrictions are trade. But to me, there's a distinction though between barriers, and I'd actually agree, there's not many barriers, but what there are is opportunities to do even more bigger, quicker. And so if I look at the opportunities, then it's really in the trade world. And in the trade world, it's all about where does the data sit? And it's into contracts and compliance. I've got US healthcare customers and it's HIPAA and it's patient data. I've got one of the US states is our customer. They're really worried about where their data sits. So, we want to run machine learning across our whole customer base, but we can't store some of the customers' data here and we can't store some of their government customers' data there. And so all of a sudden, global support, backup recovery, redundancy of traffic flowing around the world, things like machine learning. So that actually becomes tricky, not digitally, but from the compliance and the policies and the way that it works. So I think there's trade opportunities that would help accelerate this, but I don't think there's any digital restrictions at all.
And I guess we'll get an opportunity after we've heard from the others to talk about what those opportunities could be, what trade agreements could actually do to help. Because I guess on one hand, we can say there's no barriers to what you're doing right now, but if there's an opportunity that's difficult to take up, then we can also see that as a barrier.
Oh, great.
Just like if Fonterra wants to sell dairy products into a country that won't accept them, that's a barrier, even though it's not stopping their current trade. Cool. Shall we turn then to AJ, who I can't see?
Let's not go to AJ.
Not go to AJ?
No, it's not.
Okay. David.
Right. Hi guys, good morning, David Hallett. So I am co-founder of Company X. Company X, we're a professional services company. We write software and we export it. In fact, there's actually a couple of things that we do. One is we write software for other organizations and other businesses, but we also write our own software and have our own SaaS solutions. So software as a service. So there's kind of two aspects that we see in terms of exporting or in, I guess, trade related barriers that exist for us. What's really interesting is in terms of professional services, that has a requirement for us to have people doing work. So that means what we do is we actually write software for companies and we deploy software and we support it. We have a good team in New Zealand who write the software and it generally gets deployed for our US customers. Why that's interesting is because some of our customers need to have our people on site in the US to talk with them and have meetings at times as well. And so because of that, there are some, I guess, non-trade related barriers, more legislative issues, which I guess we'll get into later on around how that affects things as well. And as Andy said, we also, with our SaaS business, there's a few other things we run up against as well in terms of some of the legislation, which makes compliance a bit more interesting for us, specifically considering we're both a New Zealand company, and in our US entities are jurisdictionally Californian companies as well. So there's a few crazy things like that add to the complexity around the compliance. In terms of the report, Jordan, really, really great job in terms of what you've done. I think it's a fair and accurate representation of the industry and of the current legislative framework in which we all operate. And I was really encouraged to see that it was a pretty strong consensus that there aren't too many things that get in the way of pure digital, but most of it points to a lot of, I guess, legislation and regulations that we could look at harmonizing to make things slightly easier and more profitable for us all.
Thanks. And sorry, David, I wonder, sorry if you already said this, but just like what would be the most difficult thing for you, I guess, when you were thinking about harmonizing legislation and regulations? Is there?
Absolutely. So, I guess I could talk about the visa situation, or I could even talk about, I guess, Cloud Act or Prop 24, but probably maybe I'll talk about the visa situation because that's something which Jordan grabbed hold of as well and was aware of in the report. And that's the seems to be the disparity. And I mean, not that I'm trying to compare us with Australia, but I will. Australia has the E3 visa, which only applies to Australian citizens. But I think it's for $205. An Australian can get it basically using a specialty occupation visa, give them immediate access to work in the US for 2 years. But the thing about this visa, it's also indefinitely renewable. So effectively, you just renew your visa forever and ever as long as you want, and you're completely legitimate to work in your specialty occupation in the US. The options that don't get me wrong, the Kiwi Act is fantastic. It gave us the E1 and the E2 visas, the trader treaty and the trader investor visas, which are great in terms of obviously principles in the company getting visas to live and work, obviously not a non-immigration pathway, but it is problematic around bringing employees from New Zealand, essential employees to the US. You can bring them, but they're only allowed to remain in the US so long as they're providing providing services to operate the business. And that's only if you can show that nobody else in the US can do that job or can't be trained for that job, or the people of the primary owners have to show that we're currently making efforts to train US workers as replacements. So it doesn't really allow us to have an easy flow of people back and forward. There are other visas, the B1 in lieu of the H1B, but all these things come with much higher costs, thousands and thousands of dollars and long periods of application. I mean, if you're an Australian citizen, within days of getting your interview, you can have your visa. So things like that in terms of flow, I guess the flow of people in and out of the US is very difficult from a professional services angle for a New Zealand company.
Cool. Thanks, David. And we might come back to the Cloud and Patriot Act perhaps after we've heard from Joshua and Steph.
Great, thank you.
I see we've just been joined by AJ, which is great. Welcome, AJ. Can you hear me okay?
Hi there. Sorry, I was really eager to talk on the other side. I just had the wrong, logged into the wrong link. Yeah, great to join you eventually on the right link. So I think in just a little bit of feedback on our view of the report is, so TradeWindow is a trade software development company in its core. What we do is we enable digital trade, and we effectively trying to remove paper from trade. In our focus, it's probably going to be focusing on merchandise trade and how we enable our exporters to trade more efficiently, how to reduce their cost, how to increase trust among trade partners using technology, how to break down those barriers. And, those trade barriers is all about, legal barriers, data standards, data harmonization. So those are all really issues today with digital trade. Now, in a modern society like today, I don't believe there's a place for the amount of paper that's moving around the world. And if you think about how intensive this paper movement is and how many touch points it is and how error prone it is and high risk of security and fraud. So there's just a very long list of reasons why we need to move away from paper trade and move digital. Now, as a business that focus on digital trade and enabling our exporters, we will bring a different perspective today and trying to explain more the needs for digital trade from a merchandise trade perspective. Thank you. Thank you so much.
Thanks, AJ. I wonder, just before we move on, if I could ask you, from what you're seeing and the business you're operating and what you're seeing, the companies that you're helping, I guess what are the main barriers you're seeing to trade with the United States in terms of doing trade digitally, whether it's using e-commerce platforms to sell goods or otherwise?
Yeah. I think what can be said is New Zealand and the US are both two very innovative countries. I think it must still be said that the trade between the US and New Zealand is still, like I mentioned, still very paper prone. And, you know, when you've got so much paper moving, you obviously got a lot of errors, like I mentioned, a lot of cost, a lot of inefficiencies, and you've got delays. And when we look at the market now, there's all sorts of challenges with logistics and freight already. If we can help, you know, creating more efficiency through reducing cost for our traders, speeding up the process, removing some of these errors, getting legal harmonization, data standards, and all of these things in place that will help them to bring visibility to supply chains. And, you know, it's about productivity and connectivity and visibility, as we call it. And we also, you know, pushing really hard to connect the 4 pillars of trade, which is, you know, your commerce, your governments, finance world, and your logistics. And those 4 pillars of trade is currently siloed. The systems don't talk to each other, and there's a lot of errors and inefficiencies going on in trade today. And like it's, you know, the report has pointed out, so many participants dealing with paper, you know, all these systems built around moving paper and building security in paper. It's just so inefficient.
Absolutely. Well, thanks very much for that. What I'd like to do now is turn to Steph and then to Joshua and ask a series of questions, and then we'll come back and sort of try to connect up the agreements and what's happening on the ground. Turning to Steph, we'd love you to share your thoughts. We know you've done a lot of work in this space on the importance of New Zealand actually negotiating digital trade agreements. So I guess there's a couple of questions I had, and the first one I think is really just to ask you to explain to us what digital trade agreements actually do. So I think we hear a lot about digital trade agreements, but you know, not many people probably really want to sit down at night and read the text of one. So it would be really great if you could just give us a sense of what do they actually do, and then we'll have some follow-up questions about after that.
Okay, thanks, Tracy. I think that's a really good starting point. And actually, I'd like to even take us back a little further to Jordan's opening comment about how this is a rather, you know, niche area, but a good turnout for something that's so arcane. But in fact, I would really strongly refute that, not just because I do love my digital, but because, you know, actually everything is becoming more digitalized. This is not the sort of more traditional model of trade and business that, you know, was the sort of default for so many decades. I've seen some figures. McKinsey and Co has done some analysis of what has COVID meant for the digitalization of our region, for example, the Asia Pacific, and they've estimated that it's kind of boosted things or accelerated the digital transformation of the region and business models by a decade. So, you know, everything, and to pick up on AJ's point, whether you're a dairy products exporter or a software exporter, you know, it is fundamentally about digital enablement now. So I think that's a really important starting point. Also, to your earlier question about what is digital trade, I mean, it's the software, it's the digital enablers like the blockchain platforms, but it's also things like streaming Netflix or reading a book on Kindle, or, you know, Tracy, for you, providing your legal services over the internet. All of these ways that, you know, sort of our old business models can now be done using the internet sort of fall under this heading. So what does that mean for digital agreements? Well, I think the sort of landscape is really increasingly fragmented. So we don't have a nice foundational set of rules as we do for goods trade in the form of the WTO. There's really this sort of fragmentation of the trade rules landscape. And the main vehicle for trade rules has been through FTAs, and more recently, these sort of digital first agreements where New Zealand's really in the vanguard. And what that's meant for businesses on the ground is that when they look out to the world and selling their exports digitally, there are a lot of different rules, regulations, approaches, you know, a kind of a spaghetti bowl or a noodle bowl of different ways that digital trade is regulated. And a lot of this is in the regulatory space. So it's not like the good old, you know, pay my tariff on my kilogram of butter and get it into the market. It's a lot of the sort of rules are behind the barrier and in regulatory areas like consumer protection or data flows and things like that. As AJ mentioned, you know, the sort of the legal settings are what is key in this area. And for business, that means that the trade rules can be quite hard to identify, they can be hard to understand or apply. The divergences across markets can mean that it's very complex and costly to send their products into different markets. And, you know, overall, it's a very sort of opaque picture. So what do digital trade agreements do? Well, one of the main things that they regulate is data flows. So where data is located, where it's stored. You might see in the report this term data localization. So do you have to keep your data in a server in the market, or can it come home to New Zealand? What happens is it goes across the border in terms of things like privacy or protection or cybersecurity. And then the other main areas that digital trade agreements have, or provisions have typically regulated, is around the digital trade facilitation. So that paperless trade, can we use electronic documents and so on. And really in more modern articulations, there's also been quite a big area of digital trade rules that's been about trust, which is, you know, absolutely fundamental to people engaging in the internet. As a consumer, I want to know that this transaction is going to be you know, safe and reliable. My payment information isn't going to get lost. I'm going to get what I've ordered. So there's a sort of big consumer dimension of that, but also business to business and government to business. You know, people really want their engagement in the internet to be safe. And then lastly, in the sort of more modern agreements that New Zealand's been involved with, it's gone much further than that into the sort of holistic digital economy. So emerging technologies like artificial intelligence, these ideas around sort of inclusion for small businesses and others, and also some of the really important emerging technologies. So AI, digital identities, electronic payments, the sort of building blocks for the modern economy, essentially around facilitating from one end of a trade transaction to the other, making that all work seamlessly as possible.
And so I guess it's interesting looking at the report. I think one of the things, you know, that Jordan talked about, and that our three of our panelists have sort of agreed with, is that from a digital perspective, they don't really see, and it's between us and the United States, a lot of barriers as such. Although, I mean, AJ's talked about the paper, and that suggests there certainly isn't paperless trading. But in terms of the sort of, I guess, the data flows and that sort of side of it. So I guess that just sort of leads then to the question, if some of the barriers that we've heard about sort of still seem to be the things like getting visas, getting people into the country, some of the, I guess we might think of it as the more traditional kind of barriers that existed regardless of whether you were selling digitally or not. You know, why is it so important that we actually do negotiate agreements to deal with things where it seems like maybe there isn't a problem at this point in time?
Well, thanks, Tracy. I think that's a really important question, and something, as you know, I'm quite sort of passionate about. I think there are a number of really important reasons why we should be doing these digital trade agreements. Firstly, certainty and predictability in the exporting landscape actually has a value, especially if you're a small business. You know, if you don't know what it is that the rules are, whether the environment's going to be the same, you know, tomorrow as it is today, all of that has an actual cost to businesses in terms of dollars out of your pocket, but also around your sort of business planning, your investment, what it is that your business model is trying to do. So there's a very strong value in sort of locking in those current settings. And we see this in a lot of services trade rules, actually, the value of predictability, even if it's simply making clear what those regulatory settings are and locking them in. And I think that's, you know, been even more compelling since the COVID pandemic hit, that, you know, exporters knowing what it is that they need to do and how things can happen is absolutely critical. But also, I think something rather particular to digital is that this is a really rapidly emerging and transforming picture. So the rules that might work for today aren't necessarily going to be what either enables trade tomorrow or prevents trade tomorrow. So there's a really important sort of concept underneath the more modern versions of digital trade agreements that New Zealand has done, which is around, we need to create a platform that enables the trade rules to be responsive. So a lot of the GATT and the WTO, you know, very close to my heart, but let's face it, some of those rules are 75 years old or 30 years old. You know, we actually need something that's much more responsive as technology evolves. And that's what some of these modern agreements like the Digital Economy Partnership Agreement, the DEPA with Singapore and Chile, and now hopefully soon also Korea, will do. They create that platform for a conversation. They also importantly have this concept of interoperability. So saying, well, look, the United States might have one system, we might have another, but if we can get those systems to talk to each other, that enables more trade and innovation to happen, because, you know, exporters aren't facing suddenly a sort of a mismatch of rules or regulations or legal settings. And I think also the other really important thing that these sorts of agreements enable is innovation. So, for instance, some of the things that are in the DEPA agreement are around data innovation, open government data, creating sort of frameworks for AI. All of these things actually enable more innovative and creative new business models. You know, companies can have access to this sort of new environment and think of new business models to respond to it. And that's really key, because increasingly we're seeing a lot of businesses moving even from the sort of goods export into this terrible word, servicification of businesses, starting to spin off services and other products from their original business models. And a digital agreement sets the groundwork for that.
Cool, thanks, Steph. And if I could just ask one more question, and then we actually have a question from an audience member, and then we'll move on to Joshua. Thank you for your patience there, Joshua. Steph, I just wondered, I guess one of the things we also see in the digital agreements is the need to preserve policy space for governments, because obviously, you know, from a government's perspective, like you said, things are really rapidly changing, and it's really important to have that policy space to protect, you know, security, public, you know, interest, privacy, health, so on. So I guess I'm just interested in your view on whether, and maybe once we get back later on, we can bring Andy into this discussion as well, but just do the exceptions in these agreements, are we striking the right balance at the moment? If maybe you could just mention something, you know, where we have exceptions that sort of allow data to be prevented from crossing borders if it's, you know, required for public purposes, or, you know, allow certain data localization rules for public purposes. Like, how important are those exceptions, and do they risk undermining the kind of security and certainty that you're talking about?
Well, that's a really great question, and absolutely at the cutting edge of the sort of the trade conversation on this, because we are increasingly seeing restrictions on data flows in particular, and a host of other sort of impediments or barriers to digital trade. And on the face of them, these are often for quite valid, legitimate reasons. So protecting privacy or keeping data safe, I mean, you know, who would disagree with that? Unfortunately, we're also seeing the scope for those legitimate objectives, you know, nominally at least, being used as a kind of disguised protection. You know, it's kind of old wine in new bottles, unfortunately. And one of the things that the more sort of modern version of digital trade agreements is doing is trying to get to sort of refine down what it is that we see as being a sort of valid area for policy space, but also enabling more trade to flow. I think, you know, no agreement has necessarily got it perfectly right so far, but, you know, and we have seen a few, you know, more recent agreements that have sort of taken things maybe back in the other direction to give countries perhaps more policy space than is needed. You know, we're really using sledgehammers to crack nuts in some of these cases. But I mean, it also does come back to, you know, businesses also want guardrails. They want the social license to keep operating. So this isn't just a sort of a regulatory agenda for governments to curb what's going on. You know, it's often businesses themselves want to be sure that their data is safe and that customers' privacy is protected. But it is absolutely key that we do try to sort of be clear about what it is that we're trying to achieve and the trade rules for it. Because otherwise what we're going to see is this huge potential for inclusion, for trade, for growth, for dynamic, you know, sort of economic models being absolutely choked off by overly restrictive trade rules. So, I mean, I think, you know, it's important to have the exceptions, but it's also important to keep in mind the sort of potential for this small businesses, for productivity, for, you know, for economic growth, especially as we build back from COVID.
So we had a question from Stephen Jacoby, which is like sort of the perfect segue then into talking to Joshua. And Stephen's question is about, I guess, you know, what the NZUS Council is talking about is, you know, the prospects of a digital trade agreement or a digital agreement between New Zealand and the United States. So I guess his question was, why would New Zealand and the United States need a separate digital agreement as opposed to encouraging the United States to join DEPA or, in fact, CPTPP, which has an electronic commerce chapter? So I guess I wondered if you could speak to that, and then we can hear more from Joshua about what's happening in the US. So yeah, do you think it would be useful to have a separate digital agreement between US and New Zealand?
Sorry, me or?
Yeah, for you.
Yep.
Yep.
Oh, sorry.
Yep. Sorry.
Apologies. Yes, look, I think that there's strong value actually in the United States joining DEPA, and I think there are a couple of reasons for that. Firstly, you know, we've heard a lot from the Biden administration about how they want a worker-centric trade policy. They want to help, you know, workers and small businesses. And what DEPA offers is a really, you know, great starting point for that. It has a whole, you know, module on small businesses and a separate module on inclusion. A lot of the way its rules are designed is to help smaller players in the ecosystem to, you know, basically take advantage of the digital economy. And 99% of US businesses are small businesses. Around 10 million of them are women-owned small businesses. They employ about half of all Americans, but very few of them actually export. And what the digital economy offers is a way for small businesses to actually access the economic benefits and the productivity benefits and so on of trade. So I think, you know, the DEPA is a really great starting point for that. But more than that, the DEPA is part of the sort of philosophy that New Zealand has been developing of open, concerted plurilateralism. So the idea that small countries can get together, design a kind of a good gold standard trade agreement, and others can join on. And that is really what DEPA represents as well. And we've already started to see the momentum building. It's like a little snowball gathering in more snow as it goes. And, you know, just over the last day or so, we've seen Korea saying that it is seriously, you know, going down the road of joining DEPA. And I think that really shows, as we did with CPTPP, which sadly, of course, the US has stepped back from as well, that we can build up the momentum for bigger deals using our sort of creative thinking, taking this more holistic view of the digital economy and bringing lots of other partners from around the region on board as well. And, you know, for a kind of trade that's fundamentally borderless and should be seamless, this is definitely the way to go, as opposed to a bilateral deal.
Thanks, Steph. So if we can turn to Joshua now to give us a perspective from the US. So we know that free trade agreements don't seem to be high in the current administration's agenda, but what about digital agreements? Is there, I guess, where is the US at in terms of re-engaging on digital trade in the Asia Pacific? And do you see any prospect of the US joining DEPA?
No, thanks for the question, and it's great to be here, Tracy, and thanks, Jordan, as well, for the introduction and the work on the paper. I'm obviously Australian, but I spent the last 14 years in Washington, so I will try to bring some of that perspective to the conversation. Jason, let me just back into that conversation, maybe just by starting more broadly where the US is on trade, because I think that's really an important piece in order to really dig down into what the US might be willing or able to do on the digital front. I mean, I think what's certainly clear is that the US is still developing its approach to trade, including with respect to China, notwithstanding USTR Ty's speech early this week. But, you know, the elements that are there, which are familiar to everyone is, you know, we've talked about this already, is to some extent a re-emphasis on the need to work with allies. So we've seen renewed engagement in the WTO, particularly on trying to get a good outcome for the WTO ministerial later this year, but also continuation of some of the previous administration's practices, which are problematic, particularly around blocking of appellate body appointments. You know, but a fairly pragmatic and I think clear-eyed view of the WTO and what it can achieve and its limitations. So that's, I think, the multilateral piece of their approach to trade at this point. Again, just sort of on the working with allies or friends theme, the focus very much is on strengthening the transatlantic relationship at this point. So you saw that early in the administration, they resolved the Boeing Airbus dispute, which sort of created more space for them to be cooperative. We had the meeting of the US-EU Trade and Technology Council last week, and that's sort of important because despite AUKUS and problems over submarine deals, the meeting still went ahead and in fact actually produced quite a robust agenda, I think. And I think looking at that agenda is I think an important way of sort of getting the pulse on where US priorities are on a whole range of digital issues. So just to mention a couple which I think are sort of relevant, particularly relevant on the digital front, there was a whole range of working groups which were set up, some digital specific ones with technology standards, secure supply chains, data governance and technology platforms, investment screening, a multilateral approach to export controls, and semiconductor supply chains. Now, not all of those are clearly going to be that relevant or applicable to for New Zealand, but I think it sort of underscores where the US focus is now in the digital space. As I said, we also had a speech this week from USTR Thai on the US approach to China. And that's also an important part. It's not a purely digital issue, but given how central essentially digital technologies are to US-China tensions broadly, not only in trade, but around the security space as well, where the US ends up on its approach to trade, I think will also matter when thinking about what's next on the digital front. And so, you know, it was a fairly overarching framework approach. I won't run through the key points she made on the China bit, but we're certainly going to see sort of a combination of re-engagement with China on trade talks, but also a clear willingness to, I think, deploy what USTR Thai referred to as all tools and new ones if needed to address a whole range of concerns with respect to China. So the China piece and how to deal with China's economic model and its impact in terms of trade and economic outcomes in the US, but also I think really in the region specifically will be a central part of how the US thinks about how it re-engages on trade and how it prioritizes it. Now, there's been a push certainly in the US for a trade policy and particularly a re-engagement on the digital front. People, you know, there's sort of a sense, I think, amongst those sort of paying attention to this part of the agenda that the US is sort of, you know, missing in action in some respects from putting forward a proactive sort of agenda around sort of economic engagement in the Asia Pacific region, and that trade would have to be a central part of that. To Stephanie's point about worker-centric, I mean, this is certainly sort of a pivot point for the US, for the administration in terms of how it seeks to, you know, it's a key lens for how it seeks to develop and engage on trade policy. So to the extent that the beginning is what's new and what's going to be different, the piece is it has to be worker-centric. And frankly, I don't think there's a lot of understanding on what that might mean, and particularly what that might mean if you sort of apply it to the digital space. Stephanie had some very useful suggestions that Deep has touched on, but I think, you know, more is going to be required, I think, in order for the administration to feel that it can sort of satisfy what it needs to do domestically in order to re-engage on trade broadly, but I think on the digital piece easier as well. The China decision to join, or its proposal to accede to the CPTPP, you know, it complicates the picture somewhat and possibly opens up some opportunities. I think it really underscores, I mean, putting aside how realistic this sort of accession process is and how long it would take if it was to actually move forward, I think it really complicates for the US, you know, what its approach should be to the region. I think potentially it may even open up deeper, what, you know, as a vehicle for re-engagement, because, you know, I don't think engaging on CPTPP is really a realistic pathway for the US at all. I don't think it really was. And I think particularly if China starts an accession process, I think that will foreclose that for good for the US. And I think it will really be about starting new, starting fresh, and deeper maybe a starting point in that respect. Let me just make a couple of really quick comments about the barriers, not barriers point that's come up in the report, and conclude. My sense is the ultimate conclusion that, you know, ultimately New Zealand digital exporters are not facing barriers, should not be a barrier, clearly to I think the importance for the New Zealand of doing a digital trade agreement. And I think I won't repeat everything Stephanie said. She, I think, articulated that space, you know, thoroughly. But I just want to emphasize like one point, which is, I think, a point which Stephanie made clearly, which is that, you know, it just means you need to lock in the current framework. You know, you don't want to take anything for granted, and the fact that things work now is no guarantee that things will work in the future. It's a very dynamic space, the digital space. The politics around regulating the digital space in the US are clearly unsettled at the moment, and you would have to say that the trajectory is in the direction of more regulation, not less. And I think with that in mind, trying to ensure a particular regulatory framework for New Zealand digital exporters currently, given that it is free, by the sounds of it, should actually be a priority, not one that actually then devalues the importance of actually moving forward on this. And let me stop and happy to answer questions.
Just quickly, Josh, what about coming the other way? Well, I guess thinking about United States businesses, I guess, you know, a lot of US businesses have been real champions for digital agreements. Where are they sort of at the moment? Are they pushing for the government to be doing more in this space?
Yeah, they are. I mean, certainly, you know, the US has really been the leader on developing these digital trade agreements initially, and now other countries and governments such as New Zealand have, you know, taken that and moved with it further even, and I think that's fantastic. But, you know, it's a key sort of commercial interests for US businesses, clearly the tech industry. But, you know, to the point that so much is now digital, it's not just a tech sort of priority, it's a priority for professional services, increasingly for manufacturing, and so on and so forth. So there is a real push on that. You know, to be honest, it's the digital, you know, I think there's a debate at the moment. I mean, the US has done one digital trade only agreement, and that was with Japan. And I think it's very much an open question whether that's an option or something that the US wants to pursue. I think it's an easy thing, a much easier thing for the US to do than a full-blown trade agreement. I mean, that's certainly why the Trump administration did it with Japan. You don't have to get it through Congress either. You can do it as an executive agreement, so you can bypass Trade Promotion Authority. And, you know, because you're actually not dealing with, you know, essentially actual barriers to trade, which is where people get, you know, engaged and it becomes harder, it's more just a rules-orientated agreement, then you can sort of also move this more quickly, particularly with governments that have already signed on to CPTPP, so you're sort of already aligned on these issues as well. So in that respect, I think, you know, these digital agreements are a low lift for the US, and it's one reason I think everyone's focusing on them. But I think the question really is this where the US, does the US want to keep doing sort of these digital only agreements, or should they be more comprehensively engaging? And I think there's a tension. There is no resolution on that at the moment. I think part of the reason people are pushing this digital only agreement is because the Biden administration, I think, is clearly unwilling to do a broader comprehensive FTA approach at the moment. And my sense is that will continue until the congressional midterms at the end of next year, and possibly even through for their first term, in which case you're sort of looking at a protracted sort of hiatus on a proactive US trade policy. How sustainable that is a question, but then I think that is part of the reason why you're seeing an attempt to focus on some of these like lower hanging fruit that the US could possibly move more quickly on and more easily on, with less sort of domestic political concerns.
It's one of the things that sort of struck me in the conversation, I guess especially with the exporters, is that we talk about digital trade, and I think sometimes those of us who sort of haven't really spent a lot of time in this world make the mistake of talking about digital like it's a separate box, whereas obviously, you know, our whole lives are pervaded by everything digital. And it's the same with the trade agreement, right? We have a digital chapter, or we have digital agreements, but nevertheless, a lot of issues that are facing people operating in the digital space are still going to be covered in the other chapters. There's no point in having a great digital platform that you can use to sell into the US if your product can't actually get in. Or, you know, like as David said, if your people can't actually go to the US to negotiate contracts or whatever it is. So it seems like things really have to work holistically. mean, maybe that's a reason for trying to keep digital in a broader trade agreement rather than trying to deal with it separately. I don't know. But I guess one thing sort of coming out of that, well, I guess if we focus for a moment maybe on the newer kinds of disciplines, right? The things that weren't found in the traditional parts of FTAs, like the data flows and the free transfer of data, the data localization rules and so on. I'd be interested to hear from AJ or David or Andy, or all three, or anyone else in the audience as well. Do you think the rules that the government's negotiating that we're seeing in these agreements, are they the right rules? Like, do they match what you want to have certainty about, or what you want to see actually addressed? I know we talked a little bit about the exceptions. Do you have a concern? I think maybe Andy, it would be quite interesting to hear some of your experiences where you've said that you can't actually get some of the data you want into the country. So yeah, I wonder if I could ask some comments from our panelists on that kind of point. Are we looking at the right rules, or is there more we could do?
Okay, so I guess a couple of comments there. So I guess this whole digital physical world is actually something which is kind of merging all the time. And so I was actually at a presentation in Washington, DC a few years ago when we could still travel. And John Brennan, he was at the time the director of the CIA. And I always remember this phrase. He said, "We've entered an era where more human interaction happens in the digital realm than the physical realm." So, here we are as a species. We interact digitally, we buy digitally. And so we all know we're kind of at this point now where if the digital world dies and ends, then the physical world is massively disrupted. In cybersecurity, we've been involved in cases where we've actually had teenage suicides, where teenagers treat their digital self as more important than their physical self. And so if one gets bullied, so if the digital one is bullied, then the physical one is harmed. And so we're at this point of digital and physical are melding. And so if you look at what it's meant for us is that at some level, digital exports were fine, but because it's now touching back in the physical realm, then the things that restrict us are, well, this data digitally, it's just ones and zeros, it's binary data, where it can just flow around the world unimpeded, it doesn't matter. But what is the physical thing that this data represents? Well, so it is someone's health record, and or it is a Californian's data relevant to the CCPA, the Californian Consumer Protection Act, or it's a European's data relevant for GDPR, or it happens to be a US federal government agency's data. So now, of course, it comes under FedRAMP versus a New Zealand government entity. And so to your point, the actual digital service itself is completely global. You could argue that the internet is just this thing which wraps the globe. And in fact, if you look at moving forwards, organizations looking at and proposing whether it's data centers at sea so that they actually have no physical jurisdiction to worry about. Data centers in space for exactly the same reason. So we're starting to enter an era where the actual geographical borders and the political things become really hard to manage, but then at the same time, these are exactly the things that affect us as a business. So to David's point, we had the same, our CTO was going to go to the US. We at the time were working through an L1A visa for about 3 months, when suddenly he said, "Oh, by the way, I've got an Aussie visa," and leaves the next week. And so that was the point, is that it was so hard as a Kiwi trying to get to the US straight away, and exactly David's example, leaves the next week as an Aussie. So, but why do we need that? Well, we actually, for what we do in cybersecurity, we need a certain amount of US citizens with FBI security checks. I can't have my government top secret security cleared staff accessing that same data for various rules. And so here's the thing, is that with digital trade, to your point, how it interacts with physical data, we can't get away from that. We've ballooned in digital, and that's easy to export, but now the relevance of that digital in our lives is meaning that normal everyday trade is starting to affect what that data does. And we haven't even really touched on then autonomous vehicles and the legality that, we write some code here in New Zealand that now the vehicle in the US crashes and kills someone. So, so who's at risk there? Is that, the CEO? Is it actually the dev who wrote the code? Where were they based? So there's so much that we're going to have to look at. And I guess just before I finish, it's really then on Stephanie's point about, we need something that's not too overarching. So the digital realm is going to move so quickly with AI, autonomous vehicles controlling our lives. But the issue is, so here's another example. Again, in cybersecurity, we were doing a forensics engagement. Now, the law is so far behind in the speed that it moves, it's insane. And so we're doing some digital forensics, it's on a phone, we're using the latest technology. The information's beautiful, but the latest technology was not deemed as approved in law. And so for it to be a legally forensic, valid sort of, amount of data, we actually had to use antiquated technology, because that was in essence what the law saw as, authorized. And this new fandangled stuff wasn't yet recognized, even though it actually worked better. So you've kind of got the difference between a legal framework and the high-speed digital world.
Andy, what's the answer here? Because I don't think the way the law is constructed, it's going to keep up anyway. We've got to do something different around how the law works. What's your thought there? I mean, I'm sure you've thought about it.
Oh, certainly haven't to me, I guess. So at some simple level, things just have to move as quickly. So I guess I would argue, why do some of these things have to take as long as they do? Why can't they be reviewed more frequently? So if the laws were just a year behind, that would be good. Although in digital terms, a year is still getting quite long. But as soon as the law is 3 years, 5 years, 10 years behind, it's kind of the lifetime away.
I mean, if you've worked closely with PCO here in New Zealand and with the legislative agenda, there's lots of reasons why that is a sclerotic process. So what you're saying is we need to actually totally restructure away from the bricks and mortar of the current lawmaking processes, I think is what you're saying.
So
because I can't see,
agreed.
I mean, I can't see otherwise how we're ever going to not be at least a year, and probably more likely. I mean, I've been working on the Reserve Bank Act. It takes 3 years, basically.
But orders in council and regulations can happen easier. I think that's the key thing, is they have less in the black letter law, and so that then we don't get into the PCO issues. But there are risks in that, as you know, Suzanne. So
Yes.
I think your macro question is about, I think your question is spot on. And probably the answer is to regulate the outcomes rather than the measures. And let me give an example in cybersecurity. You can create a super prescriptive regulation that's going to outline all the security measures you need to deploy. Or you need to define the threat scenarios, malicious insider inside the organization, and you let the others to figure out what up-to-date security measures they can deploy to achieve that particular outcome and mitigate that particular threat. And I think that this is just a very different approach, and that's potentially the best way to keep up with some of the crazy fast-paced technology developments that we see happening everywhere.
That's a really interesting point, actually, because in terms of prescribing the outcome rather than the method, I think is interesting in relation to the California Privacy Rights Act. So the Prop 24, of course, which is coming into, and on the 1st of January 2023, they prescribed the fact that you actually have to build self-service tools to allow people to exercise their rights. Which is a case of them prescribing something that you actually need to build as a software company and a solution to meet the requirements of their act, as opposed to saying, this is the outcome we want people to ensure that they know how their information is being used, who it's been released to, or who it's been disclosed to. It would be far more useful to us than in California having to then go and write an administration or a self-service tool into every bit of software where there could be personal data to allow them to then go and interrogate how this data has been used.
And could I just jump in there as well, because I think this also goes to the heart of one of the sort of trade barriers that we're increasingly seeing, which is this requirement for data localization. So data has to be stored in a market. I mean, I think, whether you're Microsoft or a small business, what is that actually trying to achieve? If it's for reasons of, cybersecurity, for example, that's not necessarily the way that's going to deliver the security of the data. In fact, you're potentially creating a sort of a honeypot, to use the term of art, of, one little pool of data that's very easily accessible to a hacker. We should be thinking about, well, our objective is to keep the data safe. So maybe the way to do that is with sharding and encrypting and putting it into the cloud rather than, requiring it to be kept in a market. And there's a sort of direct trade kind of ripple effect from that as well, which is that if you're a small business, the cost of having to build a server or license a server in the market is huge, or potentially even prohibitive, and it's not necessarily achieving the outcome that you want either. So, you know, I think that's a really important point in all of this, and something that DEPA creates, which is the place to have the conversations about what it is that we're trying to achieve, how we respond to that, you know, as the technology emerges, and as the policymakers and officials have a deeper understanding of the economic, policy, social and legal implications of what it is that, you know, this new technology is presenting us.
We have another question in the
Yeah,
room.
I suppose I was going to make an observation. Peter Stevens, GS1. I know many of you on the call, but I suppose the interesting thing is it's not just where the data localization, but also we're seeing increasingly where disputes might be settled. You know, jurisdiction, and you know, we have a contract with the US Department of Agriculture, but actually there's no mediation, there's no arbitration. It goes straight to fighting in the courts and breach in the states. Well, that's just extraordinarily complex for businesses to get their head around, New Zealand businesses, about how the system works over there, let alone the cost of fighting it. So I think there's so many layers, even with a completely digital flow. I was going to actually ask the panel, I really like what, Jordan, you've done here in this report, and the focus on digital trade. I suppose I would observe that, you know, it's growing very quickly, but 70% of our exports are food and fibre, really. And we've talked to, and it talks about the digitization of the physical trade and trade. But I suppose trust in our products that are going offshore is really very complex, as AJ's commented, and paper-based. And it's really around trust from a business to business, business to government, government to government, government to business, business to consumer, the ultimate consumer. It's a very long train of trust, which is not really integrated at all. And I'm wondering whether some of the work that might be ahead of us is actually working on those flows. And I don't know whether there's, Stephanie, I know knows a lot about this, but whether any of the other panelists might like to comment on that.
Sure. And Jay, is that something you'd like to comment?
Oops, you're on mute.
Sorry. Yeah, absolutely. I'm over eager to answer that one. This is our space, and this is what really gets us excited. Yeah, I think to summarize that, it's probably that 4 data silos that I was talking about, that getting from, you know, finance, commerce, logistics and government, all the different systems to talk to each other. And although these DEPA agreements, and, you know, is great, and it's a first step in the right direction, a point that I'd like to make is it's at the implementation that gets tricky. Because what we've seen in terms of getting these agreements implemented is a point that I made earlier as well, as the localized harmonization and the localized laws that's not in harmony with these countries that we do want to trade with. So I think more work and more thought needs to go into when we prepare agreements like and enter into agreements like DEPA. All great and really a great first step, but we need to do more groundwork, to do more harmonization, data, legal, and all of these different standards, document standards. So I think that needs to go along with these agreements as local understanding of how we actually going to execute on these and how we're going to implement on these. And that's really where it all starts to fall over. And where it really starts struggling. And we've got things in place, you know, like union settled model law. It's been in place for a long time. It's only yet 3 countries has adopted that. You know, there's really great frameworks, really great standards and things that's across the world. It's been in existence for a couple of years and some much longer, but we can't get to implement those. And yeah, that for me is a point that I'd like to make. And then again, the point about the different data silos and actually legislation that actually makes it even more trickier to silo it even further by trying to localize that information in a jurisdiction or in a country. That even makes it more trickier to break down the silos.
Yeah, so it's a really interesting point, and I guess it sort of ties in with this conversation about how do we even regulate some of these things when everything's moving so fast. And of course, we want a trade agreement to last longer, you know, than a year or two. So somehow a trade agreement has to have built into it this idea that, you know, regulation is going to move. And so that whole concept of outcomes-based, you know, if we're agreeing on a sort of framework and principles, I guess, you know, there's only so much we can do in the agreement itself. I just have a question from audience member, Jenny Leith. Do we want to put Jenny on so she can ask, or shall I
I
ask?
think we're running a bit short on time.
Okay.
So just, yeah, just ask the question.
So Jenny, I'll just read out your question. So Jenny says, New Zealand groups are very concerned about data sovereignty, particularly in Indigenous groups. I just wonder if one of our panelists could speak to that question, Joshua or Steph, perhaps? Probably starting with Steph. Or anyone else.
Thanks, Tracy, and thank you, Jenny. That's a really interesting and very, kind of current question. I think this issue of data sovereignty, so who controls and holds the data and has access to it, is a really topical issue. It's something that Indigenous groups are certainly thinking about. It's a very sort of live discussion in New Zealand with sort of Māori data, but globally as well. There's this issue around a recognition essentially that data is sort of the lifeblood of the modern digital economy, and who has access to it and controls it really matters. I think there aren't very easy or obvious answers to it. It's definitely something that our understanding of it is evolving, not just because it's a rather, it has not really been traversed in a sort of trade or regulated sense significantly so far, but also because I think our understanding of what it actually means, and this is, I guess, really picking up on the discussion we've just had about sort of outcomes focused approaches, the sort of instinctive sense, which is that, if I'm an Indigenous community, I want to have control over my own data. We don't, I think, collectively fully understand the implications of what that means, whether that's, the extent to which that is going to achieve the objectives that those communities might have. And we see this at the sort of national level as well. I mean, the control over data is at the nub of that sort of tension that Josh talked about between the United States and China as well, around, where does data live, who has access to it, what use can they make of it? So, I mean, I think there's no simple answer in a nutshell. It's a very important and current issue, but maybe Josh has something to add on that.
Yeah, let me maybe try to provide something of value by getting at the regulatory piece that came up before, because this point about how do you regulate, how don't you regulate in a fast-moving environment is an important one. I mean, I think the outcomes-based focus is right in to the extent that there is regulation that clearly has to be a big part of it. There are other elements which I also work and are being better understood. One of them is regulatory sandboxes, where you experiment. And there are types of sandboxes that you can do. Ones which are sort of where you've already set the regulation and you're just giving businesses an opportunity to experiment to work out how they can comply with the regulation. But another one is actually genuinely you experiment and then you work out what regulation may actually work once you actually have a better sense of the business use cases. And I think this also underscores the thing, which is don't rush to regulate. I mean, to some extent, particularly when we're in a space with emerging technologies such as AI, how do we use data to actually generate insights and value? What ultimately we want is to free up access to data, make it more inclusive. And this is a little bit of the sovereignty issue in a way where you don't want to lock it down, you want to open it up, but you want to also make sure that it's done in a way which is trusted, and you really want to create space for businesses to innovate and regulate. I think the reality is that regulation at this point will be beneficial to the incumbents and will be particularly costly for small businesses. So regulation, and particularly regulation that is, unnecessarily forward-looking for technologies that have not matured or business models that have not matured, will stifle the ability for small businesses to come into the marketplace. And for me, this sort of really gets at this issue, which one of the what someone brought up before, which is this notion of trust. I mean, if I look 5 years out in terms of where the US is heading on this, I think one of the things that New Zealand wants to position itself as is as a trusted partner for the US. I think we're going to increasingly see the world bifurcated around trusted and untrusted partners in the digital space, which will, for crude breakdown, will be sort of China-centric and the rest and the West. And the reason I mentioned the TTC outcomes, if you look at what's in there around investment screening, export control, data governance issues, particularly around cybersecurity, but also privacy, ICT risk and supply chains, I think this is the agenda that will focus the US. And I think the question in part for New Zealand is how does it contribute and build into that? And I think a digital trade agreement will be one part of that for sure. But I think this will flow through then ultimately into the type of ease of access and the openness that is currently sort of the US system. I don't think will be one that will apply across the board in the future. I think it will be graded depending on essential levels of trust. And so I think, you want, there's no reason New Zealand can't be occupying the highest level of trust, whatever that will look like ultimately. But that for me is sort of the way that I think this will increasingly be framed over time.
Thanks very much, Josh.
If I can just also make a comment on this, especially on the Indigenous side. So there is a certain digital inclusion, which, is a real focus of the Digital Council at the moment. And so, in society, we want inclusion in society, but there's also the digital divide at the moment of those who, are frequent users versus not. So we want inclusion. And the issue, one of the issues here is that if you start to open up free trade agreements, then there might be the perception of the trust and security of the privacy. So for me, the privacy framework must move as quickly as any digital free trade that says, so for us as a New Zealander, my right to be anonymous, my right to be forgotten. Well, what happens if my data is sitting in a, US owned data center? So if it's a Microsoft or Amazon data center, then all of a sudden is my Kiwi data accessed by the Americans? What happens if the New Zealand company is bought by an American company? And so there's this mindset that says, is it my data, is it safe? So I think all the time that we're looking at free trade, which is prosperous and it's great for the economy, that I think it must be balanced with a really strong trust and security framework and privacy framework that says, but I can trust that all the time that there's this lovely free trade, I'm still in control of my privacy, or otherwise people will not, they'll pull away.
Yeah, Andy, I think just to add to that, the Indigenous Privacy Commission is dealing with the fact that many of our laws are based around what you just said is my data.
Yep.
Whereas actually Indigenous don't see it as being, there's a middle ground, which is our data, which is a cooperative sense, and actually it can't be separated out. So, so there's a generic our, not a, and a lot of ours are either by default public or they're private, and it's this middle line which is actually really, I think, going to become apparent here, certainly in New Zealand.
We're unfortunately running out of time, and there's so much to talk about. So I guess I'd just like to finish with putting one question to whichever members of the panel, would like to answer it. And I guess, a lot's been said that there really does seem to be value, real value in doing a digital trade agreement. But there's obviously a whole lot of work that needs to happen to even get to the point of negotiating something. So I'd just be interested to hear from panelists, is there anything you think that we could be doing, as a government, as a council, at a lower level, if you like, than a full-on, trade negotiation to advance, digital trade between New Zealand and the United States, whether it's cooperating with customs to try to get the US to be more accepting of paperless trade, or whether it's, particular recognition of, safe data flows in particular areas, but just any thoughts of what we could do going forward without, until we get to the stage of doing an actual agreement. Any takers?
Look, I mean, there's a lot I think that New Zealand could be doing, and this is. I mean, I think on one level, like they're just pursuing lower level MOUs. I mean, Australia's been doing that with Singapore a bit, and that's an easier lift, and they can often then build the kind of cooperation that can be leveraged into trade agreements at a later date. So, I mean, I'd be working sort of on that as bilaterally as much as possible. There's obviously a lot of work going on in other forum where New Zealand participates, the US participates, picking agendas, I think, which, a good fit for those work streams, but also sort of would contribute also to like a sort of a bilateral strengthening. And you can imagine various ones around that. You know, and I think there's a whole bunch that can be done on the science and technology front. I mean, the US is sort of at the cusp of essentially investing into science and technology and in infrastructure in a way which is not been seen since the sort of Great Society investments from the 1960s. I mean, the scale of it is absolutely huge. And New Zealand should be trying to get a piece of that. I mean, frankly, I mean, you want your scientists, your researchers to be getting as much access to the funds and the sort of expertise that is going to be building up in this digital space. So I'd be working sort of through the technology and scientific bodies bilaterally to sort of make sure that that's can be as facilitated as possible.
Thanks, Josh.
I completely endorse what Josh has said. I think there are some key sort of emerging technology areas where there's huge scope for more conversations. I mean, one, for example, would be digital identities, which is a really, you know, important sort of enabling building block for a lot of what happens in the digital economy. And New Zealand's in the process. In fact, just in front of Parliament right now is a new trust framework that's been developed to, you know, essentially sort of create the foundation for a digital identity approach from New Zealand. So, you know, we could be taking that sort of piece of work and talking to the United States about how to try to develop interoperable approaches to digital identities. But I think the other sort of really key thing, given that a lot of our bilateral trade is in the goods space and we already have a lot of common ground on digital services, I think really trying to make digital trade as interoperable as possible is critical. So the fantastic work that Trade Window and GS1 and others are doing around that sort of digital trade enablement is critical, but there's a lot more that we can be doing around making sure that standards, regulations, systems, policies, user adoption, you know, is as interoperable as possible, that paperless trade is fully implemented in both directions, because that's dollars in the pockets of exporters in both directions. And, you know, it is the way the world is moving. So let's see what we can, you know, really kind of generate in that context. And that has been a really big focus of New Zealand's hosting of APEC and the APEC Business Advisory Council this year as well, trying to make that sort of the more traditional trade work seamlessly in the digital economy. And I think, you know, that's an incredibly important area for all New Zealand exporters.
Any final thoughts on this topic from Andy or AJ or David?
Yeah, I could probably just add to that, and thanks Joshua and Stephanie for calling those out. But I think also, you know, there's a lot that government can do to enable trade, but there's also a lot that business can do, and I think from our point of view, we should probably engage more and engage government more and help them to facilitate a lot of these frameworks and standards that we're talking about, and point out some of these legal barriers. And work with government to implement some of that. So although we believe that, you know, there's a lot that can come from these trade agreements, is pointing them out and actually getting them implemented is probably the bigger challenge here. So I think business should engage more and actually take more responsibility here. And that's just my point.
AJ, you know, one of the things that we've seen, you know, recently, well, you know, a few years ago, which has been useful, is lobbying government can actually give us great outcomes. For a long time, the Ministry of Justice, when you were doing background checks on people, it could take up to months to give you a background check, which is important when we're doing US clearance checks for our team to work with there. And so Department of Justice, or sorry, Ministry of Justice here in New Zealand now have the ability to pay for faster processing or expedition of all sorts of criminal background checks, which is really, really important when you're trying to get someone to work on a project as quick as possible, not having weeks and weeks of delay. So I think there is a very definite place that we should be as a business community and industry, actually working closely with the government, saying, hey, here's some things that actually you could improve, and here's how to do it. I think being solutions focused.
Yep.
Okay. I think we're starting to lose people, so I'll hand over to Jordan. But thank you everyone very much for your input.
Yeah, thank you very much. And just to, I'm not sure I'll try to sum up the 60-minute conversation, but yes, we are dropping people. I thought, yeah, well, it kept me engaged the whole way through. It was very interesting, some key points around just the importance of locking in the current framework. There's a good reason for some sort of agreement, whether it's a deeper, whether it's a bilateral or something else. And then just the difficulties with, regulating in what is such a dynamic space. And so I really enjoyed that conversation around regulating for outcomes and some questions there. How do we do that exactly? But I think a question really worth digging into further. Take AJ's points around on the ground implementation and execution just being sort of really critical to giving sort of value to these agreements. And then I thought Joshua's points around one of the final points he made just around the essential levels of trust and access and how that's becoming a bigger driver. I think is something really important for us to be thinking about here in New Zealand. Actually, it is the topic of our a report we have coming out over the next month around that very issue. So I will keep you all up to play on that. Just, I guess, finally, thank you, a very warm thank you to our panelists. So Tracy, thank you for moderating the session today. Andy, for your contributions, as always, fantastic and valuable. And then, of course, those who joined us virtually, Stephanie, yeah, thank you very much. And should acknowledge also Stephanie's contribution to the report. Yeah, made a massive difference to how that came together. So thank you, Stephanie, for that. And then, of course, David, yeah, it was great talking to you during the interviews for the report and then having you be part of the panel and providing that industry perspective. Same, AJ, that blockchain area and just massive potential there for all exporters. Yeah, we just need to be talking about that and trying to make that happen. And then, of course, Joshua's already left. Really interesting to get that update on what's happening in the US and where the thinking is on digital and just the broader trade context. So with that, thank you very much, everyone. I will be in contact after this to provide, I guess, the copy of the report if you don't already have it, access to the video, and then probably just a couple of other things. So have a great day.